Elon Musk is ready to make significant improvements at Twitter. That's our top story today on the Wall Report. I'm your host, Greta Wall. Twitter shares are up nearly 5% today after the CEO announced Elon Musk will be joining the company's board of directors. In a tweet this morning, CEO Parag Agrawal said he was excited to share that Musk is being appointed to the board. In response, Musk tweeted that he was looking forward to working with the board to make significant improvements to Twitter in the coming months. Now, this comes after Musk unveiled his 9.2% stake in the social media company on Monday, making him Twitter's largest shareholder. An SEC filing shows Musk will serve as a Class 2 director, and his term will expire in 2024. During that term, and for 90 days after, his stake cannot surpass 14.9%. Now, Twitter surged more than 27% on Monday after Musk's stake was unveiled, marking its best day since its IPO. Now, meantime, Carnival shares are rallying today as it appears cruising is back. Carnival said the week between March 28th and April 3rd set a new record for weekly bookings. The company saw a double-digit increase in bookings from its previous record week. 22 of Carnival's 23 ships are back in operation at U.S. ports, and the final ship will be returning on May 2nd, and then a new ship will be introduced in November. And oil prices, meantime, are falling flat as the market awaits a new round of sanctions against Russia. West Texas Intermediate crude futures slipping under $103 per barrel, with Brent crude futures down about 0.5% to just under 107 per barrel. Now, Europe announced plans today to impose new sanctions against Russia's oil industry in response to alleged war crimes committed by Moscow in Ukraine. Those proposed sanctions do also include a ban on buying Russian coal, as well as banning Russian ships from entering EU ports. Now, taking a look at the economic data of the day today, services-based businesses in the U.S. boomed in March. The Institute for Supply Management's Purchase Managers Index for the services sector jumped nearly 2 points to 58.3% last month. Now, that increase was in line with expectations and broke a streak of 3 straight monthly declines. Any reading over 50 does signal expansion in the sector. Any reading over 60 is considered strong growth. New orders, production, and employment all rose at service-based businesses in March, but they're also struggling with skyrocketing cost. The Prices Paid Index jumped to 83.8%, just one tick below the all-time record high. And the U.S. trade deficit dipped in February. Commerce Department reporting today the deficit fell 0.1% to $89.2 billion. That decline came as exports jumped 1.8% to $228.6 billion, while imports rose just 1.3% to $317.8 billion. Now, that was the fourth month in a row that imports topped $300 billion. The U.S. trade deficit has been volatile as the American economy reopened faster than our global trading partners. And finally, a key part of the U.S. Treasury yield curve has turned positive once again. The 2-year Treasury yield is sitting at 2.53%, while the 10-year yield is up to 2.54%. But the spread between the 5-year and 30-year yield still remains inverted. Traders have been monitoring the yield curve for signals of an impending recession, as the 2-year, 10-year spread has inverted before every recession since 1955. The Treasury market has been volatile as analysts try to predict the Fed's next move. The central bank releases the minutes of its March meeting tomorrow afternoon, and all eyes are on that transcript to get more clarity on how FOMC members are feeling about the potential to move faster on rate hikes. So what do you think? Let me know in the comments if you think the Fed will get more aggressive than currently laid out this year. Will we get multiple 0.5% rate hikes, maybe even 0.75%? I'll see you all back here for the Wall Report tomorrow. Hit that subscribe button before you go.